This 1 minute scalping strategy is simple, profitable. It's great for new traders who are looking for a very simple step-by-step strategy, or anybody who's looking to have a good time scalping on the 1 minute. This strategy would have been used to give you this entry on this current long scalp that I'm in from the exact bottom. So make sure to like the video, make sure to subscribe to the channel, make sure to click that bell for notifications, because we are bringing you the juiciest technical analysis and trading strategy videos here on YouTube. So in order to use this strategy, we're going to open up a blank chart. We're going to put on the 1 minute time frame, and then we are going to put on two indicators. First of all, Bollinger Bands. Okay, in order to find the Bollinger Band, you are going to come to indicators, and you're just going to search for Bollinger Bands. Okay, right here. Make sure to screenshot this if you are new, and put that on. And then we are going to be also using something called the Awesome Oscillator. The Awesome Oscillator, you are going to go to indicators and simply just search AO, and it is this one right here, the Awesome Oscillator. Screenshot that if you need to. These are the only two indicators we are going to be using for a trade, and basically here is how it works. Step number one, we are going to wait for price to pierce or touch either the upper or lower Bollinger Band. These are the green lines on the chart. If price touches the upper or pierces the upper band, or touches or pierces the lower band, that is potentially going to be a trade for us. So when we are using this strategy, we do not think about even entering a trade unless price is touching the upper or lower Bollinger Band. And then the confirmation to get into the trade is a divergence. So if we're looking for a short trade from the upper Bollinger Band, we're looking for a bearish divergence. If we're looking for a long trade from the lower Bollinger Band, we're looking for a bullish divergence. What is a divergence? A divergence is when price and the oscillator are basically doing the opposite thing. It's showing a sign of weakness in a trend. If the price is making a higher high and our oscillator is making a lower high, this is called a bearish divergence. It's showing us that momentum and money is leaving the market, even though price is pumping higher and higher, showing us that there's an imbalance and there needs to be a correction. And I know what you're thinking to yourself, Jason, this kind of looks like a pair of gluteus maximus that's slightly uneven. And you know what? You're absolutely right. This is a pair of butt cheeks that is uneven. And we can see here, this waitress at the diner hanging upside down from the ceiling. As the price is getting higher and higher, we can see her butt cheeks are getting lower and lower. And look at where the money is actually. It's in that skinny right butt cheek over here, because this is a bearish divergence, those uneven butt cheeks. And look at what happens from the time the price comes up here and hits into that higher high. We get a move to the downside. And the opposite is true for a bullish divergence. A bullish divergence is where the price is making a lower low and the momentum is making a higher low. And a great example of that would be right over here, where the price makes a lower low and our momentum down here is also printing that juicy uneven butt cheek pattern, not upside down, but regular side up, where we have the left cheek very juicy, full of gravy and ravioli. If we take a little needle and pop that thing, we can squeeze out the ricotta cheese. Nice and good. But that right cheek over here is very, very skinny. That's what we want to see. An imbalance is showing us that there needs to be a correction to the upside. So it's very, very simple. We are simply going to put on our Bollinger Bands and then wait for price to come to one of those bands and then look and see if we are getting a confirmation on the oscillator. And here's something very interesting. Look at this move right here. Okay, price made a lower low from the previous low right over here. Okay, and look at our oscillator. It is getting higher as the price is getting lower and touching or piercing the band. And what we are going to do is when we enter the trade, we are going to enter. We don't have to wait for candle close or confirmation. We just want to see, is it piercing the band? And if it is, we enter as soon as we see that, and then we put our stop loss below that last low. Okay, you might want to give it a little breathing room, but what's great about this, it has a very good risk to reward ratio, and then we're going to be setting our take profits at the upper Bollinger Band. And at the time, that was right about here. Okay, when this thing printed, the upper Bollinger Band was right here. Now, this is a 0.25% move, but if you notice, it's a 3-to-1 risk reward ratio. What does that mean? It means if we're putting, let's say, $100 on the trade, right, and we're risking 1% of $100, that means we're potentially going to lose $1 to potentially make $3.75, which means these have good risk reward ratios. We could take multiple losses in a row. We could take 3 losses in a row and actually still be in profit on the 4th win, just because we are utilizing good risk to reward ratio. And by the way, it helps if you have 0% limit fees, right? One of the ways I am able to scalp on these low term timeframes, because I did actually enter this scalp on the 1 minute time frame, is by using 0% limit fees. And we do offer that on ByBit. If you sign up using my affiliate link, we have a special for Jason Casper, 0% limit fees. It's great for scalping on low time frames, and if you deposit $100, you get 1 month free of the Crypto Fusion trading bot. It's a great tool, the Crypto Fusion trading bot. It trades for you. Okay, so now what are we basically going to do? We're going to look to see if we get lower low or higher high with a divergence. So this actually would have been a win right here. Let's see the next time we pierce the band. So we pierce the band right here, no divergence. We pierce the band right here, no divergence. We're piercing the band here and here, no divergence, okay? We're piercing the band here, no divergence. Next time we pierce that band is actually right up here where we're touching into that Bollinger Band, and now we are seeing that bearish divergence print. Now, you might say to yourself, Jason, look, I see two potential entries right here, right? Maybe we would have entered on that first wick right here. Personally, I would not enter here. I like to wait for price to be inside the band and then touch the band. But some people might say because we're already outside the band, they would enter here. But for me, the main entry would be right here because we want price already to be inside the Bollinger Band, right? If we're outside the Bollinger Band, that's actually a very good sign of strength. But if we're back inside the Bollinger Band, that's showing that there's a good chance for reversal. But even if we took two entries here, and let's say we hit our first entry right here, and we targeted the lower Bollinger Band, and then we ended up getting stopped out of this trade, big deal, because the very next entry that we get right over here is going to give us the that's going to give us the win back plus some, right? That's going to give us the win back plus some. The only thing about this trade that we need to be careful of is the fact that as the price moves, so do the Bollinger Bands. And so we have to be a little proactive. Sometimes you might have to find yourself marketing out of a trade instead of limiting. But what you can do is you can extrapolate into the future. Where is the Bollinger Band going to be? So for example, let's say we go back in time and we see as we enter this short trade right about here, okay, that the Bollinger Band we can see at the time is way down here. So our initial trade setup would be like this, right? We're entering when we see that divergence, stop loss goes above the wick, and then we're targeting down to the Bollinger Band. But as we actually watch price kind of play out here, right? We're watching it play out. We can see that the Bollinger Bands are kind of getting thinner, lower, and then we can move our limit take profit up a little bit and kind of hit that take profit like that. That would get us out of the trade. So it does take a little bit of proaction, if that's even a word, but we can drag the limit orders around. So the way you would do that in ByBit is basically like when you see that the price is getting a move. So I am going to actually turn on the limit orders that I have now on the chart so that we can see more like what I'm talking about. If this is my limit take profit order, because I did not use this strategy to get into this long, but you absolutely could have. In fact, that is this long trade from right down here, the one we were just looking at. This is the trade that I'm actually in right now, but I decided to hold it longer. But if we were trading strictly with this strategy, we would have been out of the trade already with a win. But for me, I have some higher take profit set on this long. And so let's say that price is kind of trading and we're watching the Bollinger Band. At first, the Bollinger Band is here, but then the Bollinger Band is starting to come down as price starts to come up. What we would do is we would simply take our limit order and drag it down to the Bollinger Band to try and meet price as it comes up. Because if we have a limit order set, we're not going to get charged that fee. But if we're using a market order, we will get charged a fee. Now, here's the thing. We can absolutely still market out of these trades and still be profitable in certain instances, but it's much better to limit out, okay? The more trading volume you have on an exchange like ByBit, they actually give you discounts on the fees. So let's see if we can find a few more trades here. This was the last short trade that we could have taken. Let's take a look and see if we have any more. Yeah, so look at this right here. This would have been a no trade. This actually would have been a trade right here because we came up and we pierced the Bollinger Band. And we get a rejection with the bearish divergence on the awesome oscillator, as we see right here. Beautiful, beautiful divergence. And we open the trade and we hit our take profit down at the lower Bollinger Band for a 3-to-1 risk-reward ratio. Now, this is just so important here because people say, how can you make money on such small moves? It's because, look, we only need a 0.05% stop loss, which means we can put a very, very big position size onto the trade and still be risking very, very little, which means we're making a 0.2% move on a much bigger position size than we would be if we were trading on a higher term time frame, right? That's one of the things that can make scalping so profitable. And we're going to basically stack up these small gains throughout the day, understanding that the wins will offset the losses. So that is it for today's video, guys. Make sure to like the video, make sure to subscribe to the channel, make sure to click the bell for notifications. If you're looking for a great trading group to join, check out patreon.com/Jason Casper. where we give our levels, our trade setups, and 3 live streams a day, every single day. Also, for a 20% discount on the courses, check out jasoncaspertrading.com if you want to learn how to do this and do it right. And I will see everybody in the next video. May God bless you all in the name of Jesus, the Messiah, even if you are not religious. Peace, guys.